Okay, how are we doing, everyone? So what we're going to do now is we're going to take the theory behind what we learned about weak and strong highs and lows, and we're just going to apply it to a practical example on the charts. I'm on the 1 hour time frame here on EU, and all we're going to do is just apply the theory that we learned about weak and strong highs and lows in conjunction with the introduction to market structure, just understanding bullish and bearish trends and how they sort of piece together to work with each other. And it's the theory behind why when we're in a bullish trend we expect to see these higher highs and higher lows, where the higher highs are consistently being taken and the higher lows are never being broken, and vice versa for a bearish trend. When price is bearish and it's putting in these lower lows and lower highs, it's the theory behind why that is, and we understand where the protected and the weak areas are on the chart using these weak highs and lows, and you'll see how this works now in live charts. So what we're going to do is we're just going to look and see how we identified here. This was the most recent swing point, and if we just remember from the introduction to market structure video, we'd call this an FTC, a failed to close, because this tried to put in a new higher low, tried to put in a new higher high, but you can see it failed. We got a wick break, which now leaves this as a potential weak low, which has now left price to go ahead and break the swing low, okay, which now confirms to us that we are now in a bearish market, because we had a higher high, a higher low, a higher high. We've tried to put in a new higher low, that's failed to break above swing structure, and now we've had a break of structure bearish, okay, which has now violated the higher low, which now confirms to us that price is now in a bearish trend. So following on from this break of structure to the downside, this now is the highest point that has led to the break of structure. So we can now agree that we've got a new lower high within the market, which is this level right here, and this now is our protected strong high, okay, which we can denote by drawing on this right here. So we can understand that this is a protected high in the market, because following a break of structure, we understand and know that when price is bearish, we expect to see new lower lows and lower highs in the market, where the lower lows are consistently being taken whilst the lower highs are never being broken. So we know currently that if this bearish price action is to remain, we should see a new lower high in the market before a new lower low. So what we understand is that the lower high in the market is a strong or protected high, because we do not expect it to get run. So when we play price forward now, and we can see price has started to pull back now. So what we've got now, when we are in a bearish trend, the lower low is weak, because we expect that to get run. So we can understand that this is a future target, because this is a weak low, because in a bearish trend, the lower highs always remain protected, whilst the lower lows we expect to get ran. So we can expect to see some sort of pullback. Doesn't matter how deep it goes just yet, we'll go into it in a later video, but we're just looking now to see a new lower high before a new lower low, because this lower high is protected, because we know in a bearish trend, price should not violate the lower high and the lower low should get taken. So let's just play price on, and we can see price does this pullback, where we understand that what this is this is what we call a complex pullback, which we're going to go into in the next video, but we'll just understand for now we start to pull back. We're looking to put in a new lower high in the market before a new lower low. So let's just see what happens. And there we go. So we've had now what we know is a break of structure, where we've taken the weak low and we've broken through with a candle body. So we can draw on a break of structure line, and we now know we've left behind a new lower high within the market. So this old protected lower high that we had is no longer the protected lower high. This has now left behind a new protected lower high in the market, which we can denote as this one right here, okay, and we can understand and draw the protected high once again. So we've got the protected high once again, and we know that we understand that it's the highest point that's led to the break of structure, and we can see now we've started to pull back. So we can see we've had the break of structure with a candle body, and now we've started to pull back. So we've got this protected high in the market, and now we've started to pull back. So we can denote this low, as a weak low, because when we're bearish, we understand that if we're to see bearish price action continue, this lower high right here, it's always the lowest point that's led to the break of structure, should not get ran. So essentially all we're looking for now is for price to come put in a new lower high before a new lower low, because we know that this lower low is weak. So what we have is a bearish break of structure confirming a new lower high in the market that is protected, and this is the theory why we expect to see lower lows and lower highs in the market, because we consistently see the lower lows get taken. If we just draw that on, okay, we know the lower lows should consistently get taken, which we see here, which we see here, and then which we expect to see here, whilst the lower highs consistently never get ran. Okay, so we know we're looking for a lower high in the market before a new lower low. Okay. Okay, so let's just play this out. Price pulls back and it starts putting in this complex structure. Once again, what do we get right here? We understand, knowing how we look at breaks of structures on this specific time frame, we've broken through this level with a wick. So what we know is we denote this as a fail to close. So currently this is still our protected lower high in the market, okay, because this failed, this put in this new lower low. This lower high has tried to put in a new lower high. Sorry, this is not a confirmed lower high in the market yet because price has not broken through with a candle body. So we need to see what happens and what happens next. But what we need to do is break now below this low with a candle body to confirm we've got a new lower low in the market. So as you can see there now, we've now broken through this with a candle body. So this now is we're looking at is we've got a new protected lower high in the market because this was the lower low we expected to get ran. We can see it's the highest point that's led to the breaker structure, which is this right here. So now this is no longer our protected lower high in the market. We now have this protected lower high in the market right here. So what do we expect again? It's the same thing once again. If bearish price action is to remain, we understand that the lows are weak and the highs remain protected because we expect the lower lows to consistently get ran whilst the lower lows never get broken. So we wait now for the pullback, okay? And we see prices heavily pulling back, okay? And now what do we see happen? Right, we're starting to pull back now. So what we have here is our protected lower high and we've got a weak lower low, okay? Always when we're in a bearish trend, the lower lows are weak and the lower highs are always protected. So we know now currently in this this point in structure, so this is our swing high and this is our swing low, we know and we expect to see a lower high in the market before a lower low. So for that trade idea to be valid, and this will make a little bit more sense when we come into internal structure versus swing structure, we expect to see some form of pullback, and as long as this lower high doesn't get broken, okay, and doesn't get broken through the candle body, we still have the expectation to see a new lower high in the market before a new lower low. So price can pull back all the way up to here. As long as it doesn't break our protected lower high, our bias and our understanding is we still expect to see a new lower low in the market. And we always remember that. And we'll go into that a little bit more in detail in later videos. But we just know for now that we expect to see still a new lower high before a new lower low. And only until the protected high gets broken in like a bullish direction. So if we get a breaker structure bullish, this now changes our bias and it changes our like swing structure direction on this time frame if we break the protected level. So we know, like we said, when we're bearish, we consistently want to see the lows get taken. But if our lower high gets broken, this shows that we've had a change in trend and we've changed from bearish to bullish. So we know now a new lower high in the market before a new lower low is what we expect to see given current market structure. Understanding the weak low is our target because we know that should get ran and this shouldn't get ran. So let's just continue to play it on. So we get now what we call a complex pullback, and we can see here now we've had another break of structure. So now again, what do we know? We've had a bearish break of structure. The lower low once again has been taken. We've broken through the candle body. This now no longer is our protected lower high. So we can again delete that as our new protected lower high in the market, and we've got a new one. So we can see here from it's the highest point that's led to the break of structure right here. Okay, so we know currently this is our new protected lower high within the market. Okay, and this is our new protected lower high. Again, if price is to continue in its given direction on this trend, we understand the lows are weak and the highs is protected. So currently this low led to this high to this low. So what do we know? This low currently is our weak low within the market because we expect to see the lower lows get taken. So what does price do? It pulls back. Once again, we understand that we expect to see a new lower high in the market before a new lower low. And this lower high should not get broken because the swing structure is from this point here to this point here. And as long as swing structure doesn't break, we understand that it still should continue in its given direction. So for example, we know that this is our bearish swing structure. Okay, this is our swing high. This is our swing low. As long as the swing high, which is this protected high, doesn't get broken, we are still bearish and we still expect to see a new lower high before a new lower low. So let's continue and play price on. So you can see we pull all the way back. So some people might be saying, actually no, I won't go into that, might cause a little bit of confusion. And there we go. We see a new lower low in the market, and we consistently see this happen. And this is combining the theory behind why we expect to see the breaks of structures of like the higher highs in bullish markets consistently get taken and the higher lows never get broken, and vice versa for the bearish trends. This is the theory behind it. And how we use this: when we use multi-time frame analysis, we have protected and weak different swing structures that we view across different time frames, and we piece together where our protected levels are on specific time frames and our swing points within swing points, and they give us our overall trade ideas and stuff built around our structure excuse me, to know where we target and look to take our trades. So as you can see here now, the lower low has been taken following this breaker structure right here. This now again is no longer our protected high within the market, which is now left, we understand once again, it's the highest point that has led to the breaker structure with a candle body. So we know now we have a new protected lower high within the market following this one right here we just drew on. So we can understand again, this is our protected high in the market, and then the lower low is going to be weak. So we wait to see the pullback once again right here, and we can then draw on a new weak low within the market. And once again, this doesn't change. We expect to see a new lower high in the market before a new lower low. So let's just see what happens. And there we go. Once again, exactly the same thing. It's consistent. We'll just go back and reflect on what we've done so far here. If we have a look and see, we can see here that we've had bearish market structure all the way throughout here. You can see lower low gets taken, 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 lower low gets taken. Whilst the lower highs, lower high never gets taken, 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 lower high never gets taken. And we can understand now, whereas our new lower high within the market, it's the highest point that has led to the breaker structure, which is this right here. So we can now draw and understand that this level is our new protected high within the market. And once again, this, what was our lower low, is now the breaker structure, and we now continue to see price pull on. And I think this is, we'll play this up to most recent price because this is a current price action, like the 25th of January. And what do we expect? We can see exactly the same thing here, a new protected lower high in the market. What do we know? The lower low is a weak low. Oh no, sorry, it's not protected. It is a weak low. Because once again, bearish market structure, what do we expect? Lower lows to consistently get taken, and this lower high should never get broken. So only until this lower high gets broken with a candle body will our bias change and the trend will change from bearish to bullish. But until that happens, we always expect to see a new lower low, a new lower high before a new lower low. So let's just play price on and see what happens. We don't expect that protected high to get ran, and once again we've had exactly the same thing happen once again. We've had a breaker structure to the downside. Once again, the protected high never got broken, whilst the lower low consistently keeps getting broken. So this we can again understand, this protected high, which was the old one, is no longer the protected high in the market. We understand this was the lower low, it's the highest point that's led to the breaker structure. So we understand now that we have a new protected lower high within the market. Once again, I forgot to draw that one on there and on there. Okay, and we understand once again that we now have this new protected high within the market. And this is just to show you and explain to you the theory behind why we do it. And this will come and make sense in later videos when we talk about multi-time frame structure, multi-time frame analysis, understanding expectational order flow and things. Excuse me. And when it comes to sort of build on our overall trade ideas, it'll make a lot more sense when we use multi-time frame, why it's important to understand where our weak areas are on the chart, where our protected levels are on the chart, etc. And what we're going to do is we're just going to continue to follow this down. Okay, so let's just see what happens. Price comes all the way down, and this is absolutely melts, right? And still, we are still just putting in this bearish market structure. And what do we expect? Same thing. We wait for a pullback. Wait for some sort of significant pull. Right, so we're starting to pull back. That went a little bit too far. Okay, went a little bit too far there. So we can see here now we've started to pull back. So what have we got? Once again, we understand we're in a bearish trend. The lower lows are weak and the lower highs are protected. So we expect to see a new lower high in the market. That will not, and this high should not get violated. And we expect to see a new lower low in the market because obviously we're in a bearish trend and the lows are weak. So once again, this is where we have this here now. Okay, what's going on here? So what we're getting here now is a breaker structure. Now this technically is the new low with a fail to close, But what I'm going to do is, because I don't want to go into things too much in detail, because I want to keep it as simple as possible in this one video. But I understand that we'd normally say this is a fail to close, but from the price action that we've got, we're just going to, for simplicity, understand that let's just say that was a break of the low and this was a break of the high, because I don't want to confuse things and use multi-time frame to understand this more in detail. But just let's say that is a break of structure. I know we'd normally say that this would be a fail to close, but we'll understand this in more detail later on. But just understand for now that just say this is a break of structure, it'll make sense later on, and then this is a break of structure to the top side. Okay, now we've had our a new lower high in the market before a new lower low, so we knew we expected to see a new lower high before a new lower low. But what's happened? Our protected lower high within the market has now been broken, it's been violated, so this is no longer a protected high in the market. So when we've switched from bearish now to bullish market structure, we no longer have protected highs in the market because price is pushing up now. So when we're in a bullish trend, what do we expect to see? We expect to see bullish market structure, which is higher highs and higher lows in the market. What do we know when we have a bullish trend? We have higher highs being consistently taken, whilst the higher lows are never getting broken. So we understand now in a bullish trend that we have protected lows within the market. Okay, we do not expect these to get broken, so we understand it's the lowest point that's led to the break of structure, right? You can see here now prices come up, it's pulled back, and this would be more visible on a lower time frame, and we're not going to go into things in too much detail just here, but yeah, you can see here now we're pulling back. And what do we expect to see happen in the market now? We've got now a weak higher high within the market. We understand that when price is in a bullish trend, that price puts in consistent higher highs whilst the higher lows never get broken. And obviously the higher highs are weak whilst the higher lows are protected. Higher high is weak, and this is our target, and this is our higher low that is protected. So we expect that this low now should not get violated as long as bullish price action is to remain. So we can see now price pulls back. We look to see if it's going to put in a new higher low before a new higher high. So let's just continue to play price on. And we can see once again that we've now had a break of structure to the top side. Okay, we had originally this again was a break of structure. Again, this is all the fail to close things. Not to go into it in too much detail now because we'll go into it in a later video. But you can still see here that we had higher high, higher low, higher high. Okay, and then prices pulled back. Okay, and then we've had a new break of structure to the top side once again. Right here, in this case, we've had a bullish break of structure. So what do we know right now? This is no longer, well, it was this and then this one. Now we understand following this break of structure, the high has been taken. We know when we're bullish, we have protected lows within the market and weak highs. So currently, this was the lowest point. That's led to the break of structure. So we know currently that this is our new protected low within the market. Okay, and we understand that once we start getting the pullback, so we let price push on, now we start to pull back. Okay, so we understand that now we've got this new weak high within the market. Okay, and this is our protected low. So what do we expect to see happen? We expect price to pull back once again, put in a new higher low before a new higher high. And the bullish trade idea and bullish bias and structure is valid only until the protected swing low goes. So like I said, if this low was to break bearish and we got a candle body break through this swing low, then the swing structure on this specific time frame would change from bullish to bearish. But obviously we don't assume that it's going to do that, and when we come to multi-time frame analysis, it'll all make a lot more in detail and understanding of what that means to a more deeper level. But you can see here now, once again, the same thing. We've had a bullish break of structure. Okay, this is no longer our protected low in the market. We have a new protected low, which is right here. We understand that once again, it is the lowest point that's led to the break of structure. And then once again, this is the protected higher low. Sorry, I didn't draw the higher lows on just so you could see. So we've got that one there, this one here, and this one over here as well. And we understand once we start getting a little bit of a pullback, okay, this is all just one move. You can see here now, this low has led to this high. Okay, this is a weak high, whilst this is the protected low. Same thing again. I know it's repetition, but we need to ingrain it so you can see and understand it and understand the theory that when price is bullish, that we know that we want to see consistent higher highs in the market being taken whilst the lows never get broken. And this is understanding that we understand that the swing points, so the swing low to the swing high is this. the swing lows in a bullish trend, the higher lows should not get broken to confirm that we are still in a bullish trend, and only until the protected higher low breaks does that confirm a change in trend once we've broken through it with a candle body. So we understand, once again, we're now looking for a new higher low in the market before a higher high, which we can see. This is current price, which we get once again. We can see we've had that breaker structure, which is following that one right here. We understand now this is no longer our protected higher low in the market, which is now left behind this new protected higher low in the market, because we go from the higher high to the higher low to the new higher high. We wait for the pullback. There we go. So we've had a pullback now, so we understand that on this time frame we've got this new protected higher low within the market, and we understand that the high is weak and is the target that we expect to get ran, because once again we could expect to see new higher highs, the highs consistently being taken in a bullish trend whilst the higher lows never get broken. So we let this price play back out, and we can see we absolutely hit the moon, which was the trade that happened this week from recording this video anyway. So once again, we know breaker structure to the top side, nice bullish candle break, and then once again this is no longer our protected low within the market. This is now left behind the new protected low. We've got this higher high, higher low, the lowest point that's led to the breaker structure. Once again, this is left behind a new higher low within the market, which is now left behind this new protected low. We understand that once we get this pullback, we can understand here. Yeah, and that's all. This not going to go into that too much in detail, because that's where multi-time frame analysis will come in. But I'm looking at that as being one whole swing structural move, and right now, as if this current trend is to continue, which is that bullish price action, this would be my target, and currently this is my protected higher low. So currently I would expect to see a new higher low in the market before a higher high, just like we've seen all throughout here. You can see higher highs consistently being taken when we're bullish, whilst the higher lows never get taken. And then once price is in a bearish trend, we can see that the lower lows are consistently being taken, whilst the lower highs are never being broken. And those are the characteristics and the theory behind it applied to the charts. And we'll see, I think this is the current live price. See what we've got. Yeah, I think that's live price. Yeah, and there we are. So currently right now, what would we expect? Currently, if we're just looking at this for what we've got in the market right now, just from this 1 hour time frame, across multi-time frame might be different, but we'd expect just from this 1 hour to see a new higher low in the market before a new higher high. And we do not expect price to do any different, and we always assume that what we do is we don't try and predict what structure will do. We just sort of read what structure is telling us in the given moment, which is we have a protected low and a weak high. So currently we expect to see a new higher low in the market before a higher high, and we never assume that this protected low will get broken until we get the validation that it's broken with a candle body to confirm a change in trend. So that is the application video to the weak and strong highs and lows. If anybody's got any questions, feel free to pop them in the Discord.